So welcome everybody to the June 2025, halfway through the year almost. Housing market update, June 2025 housing market update. I have a lot of good information for you. I caught an interview by a guy by the name of Jim Egan, who's the real estate financial analyst for Morgan Stanley. Really great 25-minute video on that with him. I paraphrase everything for you so I can get right to the bottom line. But if you want to watch it, there's a link in the video notes here of this video. But let's start out with local information first. Let's go right to the top here and take a look at the number of new listings. A remarkably large increase in May of 2025 from May of 2024. I'm just going to go to the aggregate data here, the actual data. So if you go to hold on one second here, new listings in May of 2024 were 770 in Orange and Sussex County. This year, 1,137. So it's a pretty big change. And you can see in comparison to other years, going all the way back to 2019, the number of new listings in May almost matched that of 2019, which is really good news. That means more inventory is coming back to the market, which is the most important thing. Ultimately, that may put pressure on price to either hold or maybe come down a little bit, but it brings more choice for the buyers, which is really important right now. Okay, the next thing to look at, and to me, this is always the most important thing, is number of units sold. And you can see this is really, May was at its highest level in almost 6 years. So that's really great news. And most notably, the variance, you can see 2024, it's a little bit hard to see here unless you're really looking tight at these details. We've been pretty even with 2024, but May shot ahead of 2024 in terms of units sold, again, in Orange and Sussex County, which is, hyper local. It's this relatively small data set, but needless to say, it's telltale of what's really going on out there. Inventory is increasing. But as you can see, average sale price has not come down on the aggregate. I think that's a surprise to some of us who are working in this marketplace, who are now finding it a little bit harder to get homes sold, having to do price reductions once again. That's becoming a thing, and it's something that all sellers should really be considering. If your house is kind of sitting on the market, it's not moving, you really should entertain a price reduction, because that's ultimately what's going to get it moved. But you can see here, not much change yet in price, average price. In fact, it continued to go up in May, when really almost all other years except for one in the last 6 years has actually dipped in May. So that's interesting. Days on market is still very strong, meaning that homes are selling quick. Not much change there. You can see, again, the red line is what we're looking at for 2025. And sold to ask ratio, this is the number of homes, in what ratio did they sell to the asking price? So it's still at, every month this year has been above 100%. So on the aggregate, Orange County, Sussex County, Orange County, New York, Sussex County, New Jersey has sold on the aggregate above 100%, right? So the average sold to ask ratio over those whole markets is above 100%, which is kind of wild. That's not going to last forever. At some point, negotiation will become a thing where people are actually negotiating lower than their asking price. Right now, it's all about negotiating how much over ask, right? That's basically what it's been, but things are changing. There's no doubt about it. Okay, so let's talk now about Jim Egan's presentation, which was called Unlocking the Housing Market. And there were a couple of, people from the Journal interviewing Jim, asking him some questions. Some of the most important takeaways from that interview with Jim. 30 to 35% of all new listings hitting the market are new construction. That's the highest level it's ever been since they've started recording that number. So that's interesting. Builders are delivering new units. How is that going to translate for builders? Is that a good thing? Is it a bad thing? Are builders going to continue to invest? And they didn't really know, because this is uncharted territory. There's a lot of things, there's a lot of characteristics of this market, because what we're seeing is, just pure supply and demand issues. There's more demand than there is inventory in some markets, but not all. Like, for example, home sellers outnumber home buyers by nearly 500,000. Now, this is a data set collected by Redfin, and I don't know exactly, the certainty of their data, but a lot of recognizable sources have referenced this particular chart, hence the reason why I'm bringing it to you this month. But you can see here that this is just pure number of sellers that are in the market and number of buyers that are in the market. Now, how do they determine what a buyer in the market is? I don't know. Does it mean that like they're pre-approved? Does it mean that they're actively seeing homes, that they're putting offers in? There's a lot of criteria there that could determine it. But needless to say, assuming that it is the same criteria going all the way back to 2013, you can see here that it jumped up. There's the variance turned the other way, right? So for the first time in a long time, according to this data set, we're now seeing that there are more buyers than there are sellers in the marketplace. So that's interesting information. So the other thing that I think was important to note was that, we're kind of at the baseline of the marketplace, right? And what determines the baseline of the housing market? Well, that's the 5 Ds of real estate. I come back and I kind of talk about these things every month because it's important to recognize that, this is an adage in our industry, right? Diamonds, diapers, downsizing, death, and divorce all create movement in the housing market, right? Those are kind of like the baseline factors that, there are always going to be a certain amount of transactions. And in the research that Jim has done, he feels that we're at that baseline, that's basically, we're at the lowest level in decades of the number of housing transactions taking place in the United States of America, the lowest level, even lower than the Great Recession, right? So he feels we're at that baseline. So it's going to get better. And we're going to talk about what's going to really unlock the market in just a minute. But the idea is that, we have all these new construction units coming online. There's still a hesitation of existing units to come on the market because of interest rate differential, which we're going to talk about in just a minute. But one other question that was astute that was asked of Jim is, how does this play into the future with all of these new housing starts coming online? That means that we're increasing the inventory of houses in the United States of America overall. How does that play out over the course of time? And again, he was kind of like, well, I don't know. But I think we do know here, that is population growth. You can see, all of us have heard about the baby boomer generation, right? And how it's huge and there's a lot of people and baby boomers, right? They've created this economy that we live in now. So these up here are like the baby boomer generation, right? And you can see the further out the line goes, the more population there is, right? So the wider the line, the more population. So you can see that the baby boomer generation is still there. They're now passing away, so they're shrinking by way of death. But it's still a very large population. Then it shrinks a little bit, and now it comes back out. And you can see really the largest segment of the population right now, and I've been saying this now for a couple of months, is somewhere between like 25 and 45, right? Like that's the largest segment of the population. But look what happens to the population below 25. It shrinks significantly. I mean, look at 10 to 14, right? And then even below that, 5 to 9, very young people. People in general are having less kids. They're waiting longer to have kids, so on and so forth. So there is a shrinking of the population. Now, will this trend continue for the next, 10, 15, 20, 30 years? We don't know. But I can tell you 10 years from now, there's going to be a lot less people that need homes because the population is just shrinking. So it will be interesting to see what happens 10 years from now. I'm still going to be around doing this, so we'll talk about it in 10 years. All right. Now, another great question that was asked of Jim is they asked Jim, what interest rate? Because, all right, let me back up. What ultimately happened, and the reason why we have so few transactions going on right now, is because interest rates were in the 2s and 3s, and now they're in the 6s and 7s, and they got as high as into the 8s at some point. So there was a multi-point variance there, right? That's why the housing market basically just really didn't stop, but it came to a grind, let's say, right? The number of transactions came to a grind. So the question to Jim was, all right, they analyzed all these different factors. Everybody kind of agrees that it's interest rates that are going to unlock the housing market. And the financial people who report for the Wall Street Journal are so interested in this because the housing market makes up about 15% of GDP. It is a massive economic driver of our economy, right? When you think about all of the services that come into play just on the transaction of a home, When somebody new moves into a home, maybe they want to do different paint, different carpet, all these things. It's an economic driver, right? So a lot of industries are sucking wind right now. So everyone's interested to know, how is this thing going to get unlocked? And the consensus is it really comes down to interest rates. And we're going to hear in a minute from Amy Green from Quintessential Mortgage about interest rates and what she feels the bond markets are doing, so on and so forth. However, what he said, and I agree with this. I've been saying this now for a few months. I feel 6% is a key marker, and so does Jim. You'll hear it in his video. He says if the rates can consistently be at or below 6%, he really likes to have a 5 on the number, 5 point something, right? He feels that if the interest rates can hover there and give people confidence that they're going to stay there, the market will unlock and transactions are going to come back in a big way. And I agree with that because by and large, there's a lot of equity on the table in the country right now. The total mortgage debt versus the total asset valuation of homes there's a great variance between those two, which is great. It means it's healthy. There's a healthy amount of debt out there that's not going to stop things from happening. In general, people are continuing to spend. Incomes are generally on the rise. Unemployment rate is relatively low. So there's a lot of good fundamental factors in place that if interest rates just kind of continue to come down and can get into that high 5 area, low 6 area, it should unlock the marketplace. Now, one other question that I thought was great was, Jim, if you were in the market to buy a home, would you buy right now or would you wait a little bit? And I thought that was a great question. And he said he really didn't hesitate. If you watch the video, you'll see. He said, yes, I would, provided that I was going to stay in place for at least 5 years or more, right? And his point there was, well, look, if you're renting, you're not paying down a mortgage. You're just paying rent. You're paying down someone else's mortgage, right? We all know that in the real estate industry. That is so true. The other point that he made was rents are going up too. It's not just housing prices that are going up as well. So if you're going to rent over the course of 5 years, the rent that you're paying is not going to stay the same. It's going to continue to go up because there's a general housing crisis in our country overall. So I just thought it was great to hear that Jim himself would buy a home in today's market if he was in the need to do so. All right, great. So that's all I have for this month. But before we part ways, let's hear from Amy.
Good morning, everyone. It's a pleasure to be here with you today. And that was very informative, Jeff. Thank you for that. And I would totally agree with the 5. Like, it's that 5.88-ish area where it's going to get people off the fence to get going and put their house on the market and open up the inventory like you were just speaking about. So just really quick, since our last meeting on May 14th, the rates have held steady. This morning, the CPI inflation report data was lower than expected. Again, that is good news because in general, higher inflation coincides with higher rates and vice versa. So right now, the 30-year fix is still floating in the high 6s. On May 13th, on average, it was 6.92. As of close yesterday, June 10th, on average, 6.93.
Okay, so that's good. We're in the 6s at least.
Yeah, just barely at 7. But anyway, as of now, the 30-year jumbo is floating in high 6s, 30-year FHA floating in mid 6s, 30-year VA floating in mid 6s, and the 15-year fix is also still floating in the low 6s. So a little bit about the Fed. Jerome Powell and the Federal Reserve are expected to hold interest rates steady at their current range of 4.25 to 4.5% during the meeting next week. I do have charts. I wanted to kind of be consistent in what I share so that everybody can kind of follow along with what I did last month. So I'm just going to share my screen here really quickly. Can you all see?
Yes.
Okay, so this is what happened in the past month. As you can see, last we spoke, we were sitting right here with the 30-year fix, and right now we're right here. But you can see what happens during the month, right? It's constantly fluctuating, but after all said and done, we're right in the same spot. And I did a little chart. I mean, difference between 6.92 and 93 is $2 a month on a $350,000 loan. And just one last chart here to see, just to keep perspective on from 1 year ago, we're still around the same point from a year ago. So good news is they haven't shot up. But like Jeff was saying earlier, to have a 5 in front of that interest rate, I think could unlock a lot of inventory. Thank you.
All right, good job, Amy. Thanks so much. Dana, back to you.